U.S. markets finally bounced back last night. After several days of heavy selling, Wall Street took a deep breath and closed in the green. The date, November 19th, New York time. The Dow Jones inched up about 0.1%. The S&P 500 climbed roughly 0.4%. The Nasdaq led with the gain close to 0.6%. A choppy session, but this time, the dip buyers showed up and held the line. Now let us talk about volume and market tone. Total trading volume across U.S. exchanges was around 17.46 billion shares, still below the recent daily average of a little over 20 billion. So this was not a full-on risk-on party, more like a cautious rebound. After a sharp tech LED sell-off, market breadth was mixed. On the New York Stock Exchange, decliners still outnumbered advancers, roughly 1.6 to 1. On the Nasdaq, losers also outpaced winners, about 1.5 to 1. That tells you something important. Indexes were green, but the rally was narrow, driven by a few big names, not by the whole market marching together. Now sector and style rotation. The spotlight was back on big tech, and especially on artificial intelligence. Nvidia jumped about 2.8% during the regular session, then surged more than 5% after hours. After forecasting fourth quarter revenue above Wall Street expectations, advanced micro devices moved higher as well. Names like Alphabet and Palantir also pushed up. Together they pulled the tech complex off the lows and helped the S&P and Nasdaq finish solidly higher. On the flip side, old-school retail struggled. Target dropped nearly 3% after reporting a bigger-than-expected decline in quarterly sales. Walmart slipped as well, as investors worried about a stretched consumer cutting back on discretionary spending. So while AI is still the bright shiny story, the real-world wallet is clearly feeling the pressure. What about the macro backdrop? During the session, indexes briefly gave back gains. After the Federal Reserve meeting minutes came out, policymakers warned that cutting rates too fast could reignite inflation, and investors are still on edge, waiting for the next U.S. jobs report, especially after the record-long government shutdown. That delayed some key data releases. So how do we read all of this? Big picture, U.S. stocks are still only a few percent below their recent record highs. The AI theme is alive and well, and Nvidia just reassured the market that demand for high-end chips is still off the charts. But under the surface, breadth is weak, volume is lighter than normal, and the rally depends heavily on a small group of mega-cap tech names. If you are a short-term trader, this is a market that rewards patience. Chasing breakouts after a big run can still be dangerous. If you are a long-term investor, the message is simple. The AI story has legs, but price and risk management matter more than ever. Tell me in the comments,